Last year, Jeff Bezos paid less tax than his housekeeper. Let that sink in. The richest man on the planet, worth over $150 billion, paid a lower tax rate than the woman who cleans his house. And the craziest part? He didn't break a single law. Not one. Now, before you get angry, before you close this video and go rant on social media, Panda wants you to do something different today. Instead of getting angry at the system, Panda wants you to understand the system. Because here's what nobody tells you. The tax system was not designed for you. It was not built to be fair. It was built by people with money, for people with money. And while you are out here paying 20, 30, sometimes 40% of your hard-earned salary in taxes, billionaires are sitting in their mansions, legally, quietly, paying almost nothing. Some years, literally zero. $0, 0 cents, zero guilt. How? How is that even possible? That is exactly what Panda is going to expose today. In the next few minutes, you are going to learn the 5 secret strategies billionaires use to pay almost no tax, why your salary is the most heavily taxed money in the world, the buy, borrow, die strategy that lets the ultra-rich never pay tax on their wealth, how they use businesses, trusts, and foundations to legally keep their money, and most importantly, what you can learn from this, legally and ethically. This video will make you angry, then it will make you smart, because Panda doesn't want you to stay angry, Panda wants you to get educated. Let's expose the game. Part 1. The big lie. Everyone pays their fair share. Let's start with something you have been told your entire life. Everyone pays their fair share of taxes. Your parents told you this. Your teachers told you this. Your government tells you this every year. But it is a lie, and Panda can prove it with simple numbers. Let's take 2 people. Person A, a normal worker, earns $50,000 a year from a job, gets a salary, pays income tax. After tax, maybe takes home $35,000 to $38,000. That is a tax rate of about 25 to 30% every single month, automatically deducted before the money even touches their hand. They don't choose to pay tax. The tax is taken from them. Now let's look at person B, a billionaire, net worth $100 billion, but their official income on paper, sometimes $80,000, sometimes $0, sometimes they even show a loss. Their tax rate, sometimes 1%, sometimes 0.1%, sometimes literally 0, and it is all perfectly legal. How? Because person A earns money, person B owns assets. And that single difference, the difference between earning money and owning assets, is the most important financial lesson you will ever learn. Let me explain. Part 2. The salary trap. Why your paycheck is punished. Here's what they never teach you in school. There are different types of income, and the government taxes each type very differently. Type 1, earned income. This is your salary, your wages, your paycheck, money you get by trading your time for money. This is the most heavily taxed income in the entire system. In many countries, earned income is taxed at 20%, 30%, even 40% or more, plus Social Security, plus healthcare contributions, plus other deductions. By the time your salary reaches your bank account, the government has already taken a massive bite, and you have almost no way to reduce it. This is how you earn money. This is how 95% of the world earns money, and this is the income that gets punished the most. Now let's look at how billionaires earn. Type 2, capital gains. This is money made when the value of something you own goes up. You buy a stock for $10, it becomes worth $100. You made $90. But here is the key. You only pay tax on that $90 if you sell it. If you don't sell, you pay 0 tax, even though your wealth just increased by $90. On paper, you are $90 richer, but to the tax system, you earned nothing. This is the foundation of the entire billionaire tax game. Type 3, dividend income. Money paid to you for owning shares in a company, taxed at a lower rate than salary in most countries. Type 4, business income. Money earned through a business can be reduced massively through legal deductions, write-offs, and expenses. So here's the picture. You work a job, maximum tax. You own assets, minimum tax. You run a business, lots of deductions. You earn a salary, no deductions. The system literally rewards owning over working. And billionaires, they don't work for money. They own things that make money. That is the first secret, but it gets much, much deeper. Part 3. The buy, borrow, die strategy. Now, Panda is going to teach you the most powerful tax strategy in the history of wealth. It is used by almost every ultra-wealthy person on the planet. It has 3 simple steps: buy, borrow, die. Let me explain each one. Step 1, buy. Billionaires buy assets: stocks, real estate, companies, art, land. These assets grow in value over time. Jeff Bezos owns Amazon stock. Elon Musk owns Tesla stock. Their stocks go up in value by billions of dollars every year. But remember what Panda just told you. If you don't sell the asset, you don't pay tax on the growth. So they just don't sell. They sit on their assets. The assets grow, their wealth increases. But on their tax return, they show very little income, sometimes zero. But Panda, you might ask, if they don't sell their assets, how do they get cash to live their luxurious lifestyles? Great question. That leads to step 2. Step 2. Borrow. Instead of selling their stocks and paying tax on the profit, billionaires go to a bank and say, I have $50 billion in Tesla stock. Lend me $1 billion in cash. I will use my stock as collateral. The bank says, of course. Here is your $1 billion. Now here is the beautiful trick. Borrowed money is not income. It is a loan. You don't pay income tax on a loan. So the billionaire now has $1 billion in cash to spend without selling a single share, without triggering a single dollar in capital gains tax, without reporting a single dollar in income. They live in mega mansions, they fly private jets, they buy yachts, all funded by loans against their assets. And the interest rate they pay on those loans, maybe 2 or 3%. The tax they would have paid if they sold the stock, maybe 20 to 30%. So they save 20+% by borrowing instead of selling. This is not illegal. This is not a loophole being exploited. This is literally how the system is designed to work. Step 3, die. This is where it gets truly unbelievable. When the billionaire eventually dies, their assets pass to their children or heirs. And in many countries, something magical happens. It is called the stepped up basis. Here is what it means. Let's say a billionaire bought stock for $1 million. Over their lifetime, it grew to $1 billion. If they sold it while alive, they would owe tax on $999 million in profit. But if they die and pass it to their children, the children's cost basis resets to $1 billion, the current market value at the time of death. All that $999 million in growth, never taxed. Not a single dollar. Gone. Disappeared. Erased from the tax system. The children can then sell the stock at $1 billion and pay 0 capital gains tax, because according to the system, they bought it at $1 billion. Then guess what the children do? They start the cycle again. Buy, borrow, die. Buy, borrow, die. Generation after generation. Wealth growing. Taxes? 0. Are you angry yet? Panda understands. But keep watching, because Panda is about to show you what else they do. Part 4. Businesses, write-offs, and deductions. Billionaires don't just use the buy, borrow, die strategy. They also use businesses to reduce their taxes even further. Here is how. When you earn a salary, you pay tax first, then you spend what is left. When a business earns money, it spends first, then pays tax on what is left. This is a massive difference. Let me give you an example. You earn $5,000. Tax takes $1,500. You have $3,500 left to live on. The billionaire, the business earns $5,000. The business spends $4,500 on expenses. Only $500 is left as profit. Tax on $500? Maybe $100. But what kind of expenses?